In the early 2000s, a storm was forming beneath the bedrock of the global economy, a financial crisis that almost no one in power saw coming. America was obsessed with real estate. Homes were selling in days. Prices were disconnected from incomes. Everyone shared one dangerous belief: housing prices could never, ever fall. But behind the excitement, something dangerous was happening. Banks began lowering standards. They approved loans for millions of people with low income and poor credit histories. These are known as subprime mortgages, loans that were destined to fail. The trap was the adjustable rate mortgage. Borrowers were lured in with a low teaser rate for 2 years. After that, the payment would brutally reset, doubling or tripling overnight. A ticking time bomb built into every contract. Wall Street took these risky loans and created financial alchemy, a process called securitization. They bundled the subprime loans together, mixing them with safe loans, into packages called mortgage-backed securities. Rating agencies, paid by the banks themselves, stamped these inherently risky investments as AAA. Pension funds, banks, and investors worldwide bought these toxic assets, believing they were gold standard safe. No one realized the foundation was cracking. When the Federal Reserve raised interest rates to combat inflation, the time bombs went off. Millions of arms reset simultaneously. Families couldn't pay. They couldn't refinance. They could only default. Defaults surged. Foreclosures exploded. With too many homes on the market, prices collapsed. People who bought recently found they owed the bank more than their house was worth. A wave of panic swept across the country. The banks holding those worthless MBSs faced collapse. When Lehman Brothers failed in September 2008, global markets panicked. Trust vanished. Interbank lending froze completely. The financial system, built on risky loans, began to unravel. The shock was instant and global. Credit dried up, crippling small businesses and factories. Millions of jobs vanished. Markets fell. The world entered the worst financial crisis since the 1930s. The housing crash was a powerful, painful lesson in how greed, unchecked speculation, and a failure of regulatory oversight can shatter the global economy. Understanding this complex failure is the first step in ensuring we never repeat it.